evening, traders from across the globe, and welcome to the 1,400 and... Oh, we have 400 already? Jeez. 1,469th edition of Short-Term Trading Live with Oscar. And some of these videos aren't always about short-term trading, but they are about technical analysis and how to use that craft to tell where the market will be going in the future. So I'm here to teach that to you in video 1469. This video coming to you on a Monday night for Trading Tuesday, May 17th, 2016, is being brought to you... Olivia, you want to get involved? By me and maybe Olivia. I don't know. We'll see if we get her up here at some point. I'm not sure. I see the scared look on your face. But Olivia just came home from Reno. Nice to have you back, sweetheart. She's a top analyst, as you know. You've seen some of her work, and now she's back here at the helm. Maybe she'll help us out. We'll see how it goes. Thank you, Olivia. So, remember, futures trading is extremely risky, causes substantial financial loss, especially with the market moves we see these days, is not suitable for all traders. And believe me, if you don't know about putting your stops in first, and that a stop is absolutely going to be your best friend, why is a stop your best friend? First of all, what is a stop? Do we know what that is? Many of you stock traders, from what I understand, don't even recognize what a stop is. I know. Don't worry, commodity traders. I'll calm these guys down. I'll tell them what it is, I promise. All right. Many stock traders, from what I understand, don't even use stops. A stop is this. You get into a position, I don't care if you buy Apple with Warren Buffett or if you buy anything that you want. You get long a stock, the market starts to flash crash like we've seen in the past, and you've got no order in that knocks you out of the trade and accepts a loss at a certain point, a stop loss order. And if you get into a position and you are long that position and a flash crash comes and you don't have your best friend, a stop order, you know why he's your best friend at that point? Because you're crapping in your pants, you don't know what to do, you fight with your wife, you're punching the screen, but you're not getting out of the trade. You know what your best friend does? Knocks you out of the trade, no questions asked, because that's why you put the stop in to begin with. So while you're panicking, the stop will knock you out of the bad trade. You live to fight another day. Put your stops in, put them in first. Let's move forward. So, what is going on? So markets are getting very volatile, and I'm here to tell you this. I say, and I'm going to say this, and I want you to hear it, because, boy, you know you're going to get yelled at from me if you don't listen to me. Do not, I repeat, son, do not fall in love with the upside of this stock market move. Not yet. Can it continue going higher? Of course, anything like that can happen. But I have been showing you week after week that there's this really big formation that may top this market out for a little while. And now it's starting to act that way. So just because we had an update yesterday, don't get your panties in a bunch and run out and sell the farm and get long anything. Let's see where this is going to go. We're starting off with a neutral Omni, an emini S&P, NASDAQ, and the U.S. indices for starting off the day on Tuesday. Maybe we'll get involved. Maybe we'll even get long, but that's going to be a short-lived trade if we do. Do I have to repeat it again? Do not fall in love with the upside of U.S. indices. Not yet. I'll show you the charts. Gold, and you've heard this before, but when you heard this from me, it was when people were bearish gold. It was when gold was $150 lower, and no one's seen this coming. But I am here to say, and you've heard it a lot, gold does not act like this for no reason. It just simply does not act like this for no reason. When gold builds a base and takes off, when the economy still looks good, when the market still looks good, it is not taking off because it feels like doing so, because it's in a good mood, because the stock market's going up. That's not what gold does traditionally. Gold making the move that you're seeing is absolutely a prelude to something coming. Now, what will that be? It could be anything from an actual stock market problem to the second coming of Christ. I don't know what it's going to be. Could be a really big news event. I don't know what it means, but I do know this. In my lifetime, 35 years, I've seen gold do this 3 times. 1987, I see, well, actually it happened before that, but I wasn't really involved in the markets as much. I was just hitting the trading floor as a kid, and the Hunt brothers built the markets up for gold and silver. Barring that, which we know were 2 guys pushing the market, I have seen gold in 1987 take off for no reason, and what happened after that in 1987? In fact, April 27th, 1987, the gold and silver started to run for no reason. By October 1987, you know about what happened in October of 87, right? We had our big pullback, big crash, biggest one we've seen since 1929 that we can recall. That was the first time I seen it. The second time I seen this happen was 2005, 6, and the beginning of 2007. Gold just took off in 2007. It based in 2005, it moved around in 2006, and it just went in 2007. What happened in 2007? Does anybody remember what happened around October 2007? I'll bet you do, because that was the biggest crash we've ever had, bigger than the 1929 crash. What preceded it? Gold took off first for no reason. What have I seen recently? Exactly what I have pointed out to you. Gold put in that cup and handle bottom. It took off for no reason, and out of the clear blue, we're getting a topping looking pattern in the stock market. Now, I know that gold might be going up just because you've got every single excuse under the sun. Chinese are buying, blah, blah, blah. Think of anything that you want. I've been watching 35 years. I know what I see. When gold acts like this, gold does not act like this for no reason. You heard it from me. Traders, Omni Camp. Hey, congratulations, Omni Camp. All the seats are taken. Rock and roll. Clap your hands, everybody. Hooray for Omni Camp. I love these Omni Camps. So, I have a handful of Omniacs that are coming out to Las Vegas for June 3rd, 4th, 5th, and 6th. They are staying in the new Omni Camp 2.0 hotel, if you will. It's not a hotel, but that's what we're going to dub it for now. You will stay together. Camaraderie, hopefully, will just meld between you. That's why I want you all to stay together for this camp, so that not only do you learn the techniques and you learn the Omni, but you build some camaraderie. You can call one another. You can help each other after camp. That's why I bought this place. That's why I renovated it. That's the meaning and the purpose behind Omni Camp 2.0, and I hope it works for you. Congratulations to the select few that we've chosen to come out. Sebastian, I couldn't hold your seat off any longer. You didn't get back to me on time. And my buddy from Peru is going to come out. Welcome, welcome. Hey, now you know I've chosen you. You'll be coming out for the Omni Camp. I'll give you a call tomorrow. All right, so that's enough about Omni Camp. What this is about is showing you the analysis on the charts, which is really exciting if you ask me. With no further ado, let's go look at some charts. Okay, traders, emini S&P weekly bar chart. You've seen this many times, and it has been working, so you need to see it again. When I started to show you there was a problem with our market, I did this video called the "Oh crap" video. Many of you, I'm sure, remember that. The term used there was not quite "oh crap," but you get the point. A little more vulgar at the time, but I was trying to make a point. But I did a video for you called the "Oh crap," if you will, video. And I said, I think this market is having trouble. And it was right here. And look what happened right after that video debuted. I mean, almost immediately, the market absolutely had trouble. From there, the Omni projected that this was a head and shoulders. You had a left shoulder, a head formed, and this drop would take us into the right shoulder. That right shoulder would come up for what we like to call the Oscarism known as a head test. And all of that has happened so far. All of it has happened with me calling it before it ever got there. Then I also mentioned if the head test starts to fail, the market would start to crack a little, and we need to monitor this. So for weeks and weeks, I've been showing this to you. We went right to the exact spot where we thought it would get, and it started to fail. You had a one-day up move on Monday. One day, these are weekly bars. It went up a little bit. Don't fall in love with the upside just yet. You need to clear this whole area in order to fall in love with the upside. We haven't done that yet. It wouldn't take too much, but we're not there yet. So far, the Oscarism prevails. This needs to be monitored. The head test is absolutely proving to be difficult for the markets. Let's see where we're going to go. That is a weekly chart. Then I take you into the German DAX, and you've been watching me present you with this chart for, I don't know, a year now? This is not right. Something is absolutely wrong. This is not right. What do I mean by that? See this line? It goes back all the way to 2009. I just can't fit it all on one chart. You do not get below this line. You get near it, you don't get below it. 2014, in between 11 and 14, you never touch the line. From 2014 to 2015, you smack into the line. Then you go up, and in the same year, you hit it again. Then in the same year, you go back up, and you come back down. And in 2016, you get through the line. That's not right. Now we're under the line and staying underneath it. We got above for 2 weeks. It came right back down. That is not right. All of this blue should be above the red line. Another sign that maybe, just maybe, there's a reason why gold has rallied and the S&P has put in that head and shoulders looking formation. Let's take it one day at a time. This could always turn around and be gangbusters bullish, but we're getting signs that it's not right. That's what I see on the weeklies. Let's take this down to a daily now, what we would use to trade on Tuesday. The DAX. This is not right. Look where you are right now. You are below the channel, way below the center line, but there's an Oscarism average I like to use when the markets get a little difficult, because you'll notice we don't really get involved in the market and the average. They don't come together too often unless something is going to happen. And you are below the average right now, which was absolutely not the case for a really long time. Now we are below the average. And if you ask me, that's a baby head and shoulders right there, and below that bottom trend line. So don't fall in love with the upside just yet. That's a daily chart for the DAX for tomorrow. E-mini S&P, same Oscarism average. Above it, above it, above it, above it. We stay above it, but now we're riding below it. What else are we doing? At the exact spot where that average comes in, you also hit the top of a very important trend channel. Right here. That's where we're basically bouncing up against. Can we get above that? Absolutely. Should we be ready to jump on it and buy it like gangbusters? Not yet. Let's get above here first and see what happens. Until then, this has become bearish. You can even pull that head and shoulders out of the daily right here if you want. I mean, it's all over the chart. Let's continue to move. NASDAQ daily bar. Oscarism plus the 200 bar moving average converging above the market right there. Interesting, isn't it? The 200 bar we know is the fund manager's blue light special, but these two averages don't always come together. Sometimes you could spend 2 years, they never meet. Here they crossed, and here they're getting ready to cross again. So interesting what's going on there. What does it mean? Well, for now, we've got to stay in bearish mode. We're under the 200 bar moving average, so we're selling rallies, at least mentally we're selling rallies. We are neutral for trading on Tuesday, so we're not doing anything yet. But what kind of market is this right now? Is this a flag? Well, yeah, it's some kind of a flag. Is it a bear flag? Well, maybe. Maybe that's a bear flag right there. We got the averages converging right there. We've seen the market having trouble. You've got the head and shoulders building, even on the daily and the weekly. There's a lot going on to tell me to tell you. Don't just run out, sell the farm, and get long yet. Let's watch the behavior here. Same Oscarism average, but now we're applying it to the Russell 2000 daily chart. You'll see generally we stay above it, then we got below it, and we also have this little bit of a resistance line right here. So there is resistance above the market, which is one of the reasons why I'm telling you to do not fall in love with the upside for now. Let's see what happens. We get a gangbusters rally and we stay up there a few days. Maybe we'll start to fall in love with it. For now, do not fall in love with the upside. Let's see where this is going to go. Then there's gold. That same exact average. You notice all the indices were below it? Where do you see gold? Above it. Stays above it most of this time, gets under for a little while, gets right back above it again and makes a bull flag. Gold does not act like this for no reason. First we had the cup and handle. That was pointed out to you when it first was basing down there. And we had the major rally. We based again and another rally. And I kid you not, you can call this another cup and handle. So this and this are almost the same thing. I can stretch this out right here and make it a perfect one for you. So cup and handle again most likely here. The Oscarism average, gold is above when the other markets are below. So interesting there, because you'd expect gold to go higher if the S&P was going to drop. And then we move out to the grains, traders. Corn, 3 times a charm? Well, hey, above the 200 bar moving average, you get one rally, but it doesn't last. You get a second rally, it doesn't hold. Third time above, is 3 times going to be a charm? I would think so. If you look at the soybeans chart, The 200 bar average isn't even on here anymore, but you know where it would be? Down here. When we got above that, look at the rally that ensued, and then you have a bull flag inside of this wonderful channel. A lot of reasons to be bullish. Soybeans, even if you had a one-day down day, you need to be bullish right now with these formations. And I think corn is going to join the soybean race. Traders, those are the charts I wanted to show you. Pull your own charts, do your own analysis, and meet me at livewithoscar.com. So traders, you've seen the chart, you've got my technical reason why I am telling you, do not fall in love with the upside, not yet. Let these markets get way past this area if you're going to fall in love with the upside. Will you buy dips? Well, the Omni's bullish for trading and buying dips on Tuesday, but we're not going to fall in love with any of that action. And the Omni likes to buy the gold and maybe some grains as well. Now traders, you've got George Soros on Monday doubled his bet. He's got a $500 million bet that the stock market goes down, and a $128 million bet in gold that gold goes up when the stock market goes down. And at the same time, you got Warren Buffett that put $1 billion into Apple that says the stock market goes up. Two big powerhouses betting against one another. Isn't that interesting? This is a very interesting juncture in our markets. Let's see what we're going to get. You've got the formations. We cannot deny them. Will they work? Well, that's always another story. Not every technical formation works, but this is a long one. It's taken a long time to build, and generally those are accountable. Gold does not act like this for no reason. And you see what's going on with our U.S. indices. All right, traders, that's about it. Meet me at livewithoscar.com in my free trading room. Omni Campers, I'll see you in a couple of weeks. Make sure you get into Vegas on time on Thursday. Get a little rest. We're going to work hard. And I will see you for Omni Camp. Everyone else, remember to try to keep your emotions at bay. It's not an easy thing to do. This is a very difficult game. In fact, this has to be the hardest way to make the easiest money on the entire planet. It has to be. Nothing could be this hard to make such easy money. So make sure you put your stops in. Try to keep your emotions at bay. One of the best things you can do, in my opinion, is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stop smiling. Stops are in. Emotions are out. Rock and roll. I'll see you all at livewithoscar.com. I know it's crazy, but it gets their attention. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.